Hello, hello, hello. Welcome to All Stock Trades. Mike check 123. All right, guys, this is going to be a very informative video. So first off, today we went ahead and started off negative on SoFi, and it was just a great time to go in and buy the dip. And what we see here is a remarkable rebound. So I want to go ahead and look back. By looking back into the history, you'll be able to connect the dots in the future. Those are not my words. Those are the words of Steve Jobs. On December 29, 2023, literally, what is it, 19 days ago, 19, 20 days ago, we went ahead and did some analysis utilizing our institutional data sets. And let's go ahead and read. With the current stock market nearing its all-time highs, historical data over the past 73 years shows that when the market approaches within 1% of its peak, it rarely declines by 20%. Instead, there has been 11 instances of such proximities, each followed up by a full recovery. This pattern suggests that the rally has momentum and the bull market is likely to continue despite the preference of short sellers. The anticipation of new highs in January, especially in the S&P 500, is a testament to the market's resilience. We anticipate, you can read it here, the anticipation of new highs in January. Okay, we did the analysis and we went ahead and we reiterated this. And in fact, we published this on December 29, but we also reiterated again on our proprietary stock terminal. But I wanted to go ahead and show you again another screenshot because, again, you can't make this stuff up, right? Unfortunately, you know, people like to line up for other folks' due diligence that they don't do, you know, it's not actual due diligence. And, you know, it's funny how the one that has the less viewerships tends to be the one that has the highest due diligence. Again, we published this again on January 11th, literally 8 days ago, and that's when the market was going down. And we said, firm outlook for the S&P 500 to reach all-time highs in January. And would you look at that? Today, you see this big guy with his face open. Stocks roar as S&P 500 eyes new record high. And yes, it did. But am I surprised? No, I'm not. Because we do our homework here at All Stock Trades. We do our homework, right? We do our research, right? We don't do hype. We do analysis, okay? We like to basically understand what Wall Street's doing because I pay tens of thousands of dollars to know what's going on the inside. All right. So now that we went ahead and taken this, and you've seen this, we've called SoFi expensive at 20. We called it a great deal at 4, and we're calling it a good deal right now. And if you want to watch that video, this video here, you can find it right here. I said it, 2 weeks ago. And pretty much, year-end analysis. Okay, so without further ado, by the way, this is our stock terminal. We made it on Discord to make it cheaper instead of charging an arm and a leg. So you just type in the command and it gives you like 10-year financials. You can do intrinsic values, but overall, let's take a look at SoFi right now and let's see on the technical analysis what's going on here. So if we open up SoFi and take a look at the technical analysis on the minute, this is the artificial intelligent replanted resistance lines. And you can see here that we broke out of the 741. We're currently trading at a 747. So it is rebounding. The problem is this is a bad view. So the minute view is not going to give us a lot of detail, which is why I did it so I can show you guys how to use this. So then you go up to the day, or first off the hour. You go up to the hour, and then you see, okay, it seems as we have an R forming a double bottom at the $7.33 range. Who knows? We may not hit the $6.75 range. I know there's a lot of SoFi folks out there that are like, hey, we might go back down to 6, based off of this double bottom here, potentially, we may rebound, after this. But again, let's go ahead and go deeper. Here's the hour. Let's go in and let's look at the day. Okay. So you can see the rebound here near that $7 region. Again, if it basically fails to break, we're going to go down to 686. Sorry, if it fails to hold, we'll go down to 686. Let's go ahead and take a look at the week. Oh, yep. So in the week here, again, 638. So basically the biggest thing to look at is 733, right? So today, what did we fall down? So we went down to 722, right? So it seems to me we had some strong buying. So we're going to look at an I-733. And on the minute, that's why I like the minute. It kind of gives you, so 733. That's going to be the eyeing point here. And if it basically fails to break that again, then we might go in and have a further down cycle again, which provides us opportunity. We know this is going to be profitable. I mean, it's back in the day when retail investors didn't have Twitter, YouTube, and folks that were able to share their due diligence, and also the data sets were so expensive. A company like ours would have never been able to survive. Now we've been in business for over 3.5 years, 3 years, and I've been in the markets for over 10 years. So there was no way in the hell we would have been able to survive, given out how cheap the information has gone. Back in the day, you would need to have millions of dollars to be able to get this information. But now it's slowly getting democratized. I.e. example, Robinhood, what they've done with the free trading. So overall, in terms of the market, with its all times high, with this all new time high right now, there's going to be a lot of people that are going to come in right now. But let me tell you the next story. Like I said, the first half of 2024 is going to be volatile. If you go ahead and analyze the presidential cycle analysis since 1950, you're going to see that if you analyze and plant all the presidential cycle years and put the S&P 500 returns into a statistical analysis, what you're going to find is the first half of the presidential election cycle year is actually choppy and a near break-even rate. So we believe that we may see a drawdown in the S&P 500, okay? However, in the second half of 2024, we believe that it is going to be very vibrant, it's going to be green, and we believe it's going to be outperforming. And we do believe it's going to hit all-time highs, right? Definitely with an S&P 500 over 5,000, easily. But the thing is, we do believe there's going to be a drawdown, okay? The RSI needs to reset, and we need to make newer high, higher highs and higher lows. So don't get scared, if we see a little drawdown, right? I wouldn't say nothing more than 10%, right? Less than 10% drawdown. Again, I'm like talking about drawdowns, and this guy's basically having the time of his life. Remember, folks, whenever Wall Street goes left, you need to go right? You need to be a Contrarian thinker, right? That's what we basically try to preach. That's what we basically try to teach. Again, if you found value in this video, smash that like button so other retail investors can hear about our base due diligence so they don't get caught up with these Wall Street folks, right? And then for folks that are interested in our stock terminal, we do have a Happy New Year coupon code, which will be ending in the month of January. So take advantage. Coupon code New Year's, $800 off. All right. You're not going to see prices like this, guys. It's a really good deal. All right. So take advantage. And overall, folks, I hope you like this due diligence, and I will see you on the next one.